You can never have too much Bitcoin. We're big Bitcoin bulls. Our thesis is that Bitcoin is digital property, but without the risks and liabilities of commercial real estate. It's a digital commodity without the risks and the liabilities of gold. It's a digital tech investment without the risks and the liabilities of big tech. And so we're bullish. When banks on Wall Street and responsible custodians are managing Bitcoin and the industry takes its eyes away from all of the shiny little tokens that have distracted and demolished shareholder value, I think the industry moves to the next level and we 10x from here.
What fuels Michael Saylor's exceptionally bullish stance on Bitcoin? His optimism stems from the anticipation of a remarkable 10x surge, envisioning Bitcoin reaching $350,000 per coin. In his recent pair of interviews, Saylor delves into the factors that underpin his bullish outlook over the next 12 months, attributing it to the convergence of a perfect storm involving the Bitcoin ETF and the Bitcoin halving, coinciding with an uptick in demand. Saylor elucidates his perspective by highlighting a pivotal aspect: the primary sellers of Bitcoin are Bitcoin miners. These miners, driven by the need to cover electricity and capital costs, contribute to an annual selling volume of $12 billion. However, he emphasizes that following the Bitcoin halving scheduled for April 2024, this natural selling pressure will be halved to $6 billion annually. This significant reduction in supply aligns with the imminent introduction of the spot Bitcoin ETF to the market, creating a dual effect of supply contraction and a surge in demand, setting the stage for an unprecedented scenario on Wall Street. In the upcoming section of the video, Saylor further breaks down the mechanics of the spot Bitcoin ETF, shedding light on why this development is poised to unleash a tsunami of institutional capital into Bitcoin. This multifaceted analysis provides valuable insights into the intricate dynamics driving Saylor's bullish projections for Bitcoin's future.
Most of the natural sellers of Bitcoin in the market right now are Bitcoin miners, and they have to sell to pay their electricity bill and their capital cost and retire their debt. That's about $1 billion a month worth of selling into the market. The protocol forces that to be cut in half as of about next April, late April. So you're going to see $12 billion of natural selling per year converted into $6 billion of natural selling a year, at the same time as things like spot Bitcoin ETFs increase the demand for Bitcoin. So that's why all of us are fairly bullish over the next 12 months. Demand's going to increase, supply is going to contract, and this is fairly unprecedented in the history of Wall Street. Well, I think the Bloomberg analysts that cover this, they're of the opinion that it's highly likely to happen by early January. I think it'll happen when it happens. But long term, I guess the most important point to be made is institutions are adopting Bitcoin. It's highly likely that it will happen, if not by first quarter of next year, at some point in the coming 12 months. And we know the halving is coming. So if you've got a 12-month to 48-month time horizon, this is a pretty ideal entry point into the asset. Well, I think it's going to help. It's going to accelerate adoption, and it's also going to accelerate institutional awareness and education efforts of Wall Street to teach the 99% of the investors that don't know about Bitcoin what it's all about. MicroStrategy is a differentiated offering. I think spot Bitcoin ETF is a great thing for investors, but we don't charge a fee. We use intelligent leverage, and we can generate a tax-deferred Bitcoin premium for our investors. So for people that are really long-term bulls on Bitcoin, we represent a pretty attractive option or alternative to a spot Bitcoin ETF.
Michael, I want to ask you about another regulatory change that's afoot. The Financial Accounting Standards Board voted unanimously to adopt a new standard that's going to require businesses to use fair value accounting for Bitcoin and other crypto assets. This could be meaningful for MicroStrategy. You just reported a loss, an impairment loss, tied to Bitcoin in your earnings last night. I think that number is now ballooned to more than $2 billion in impairment losses since you started holding Bitcoin on your balance sheet. Expecting more guidelines before the end of this year and then an implementation in 2025. What does this mean for MicroStrategy? What does this mean for companies more broadly? Does it make it more attractive to start to hold Bitcoin?
Long term, this is going to open the door for corporations to adopt Bitcoin as a treasury asset and create shareholder value with their balance sheets. I mean, the big dilemma in the market today is the Magnificent Seven. 7 companies are generating all the shareholder returns, and 7,000 companies are struggling to create shareholder value. MicroStrategy's secret is we're leveraging our balance sheet as well as our P&L. We've got more than $5 billion of assets on our balance sheet, and Bitcoin is growing at 3 or 4 times the cost of capital. So imagine what happens if other companies are able to use their balance sheets as assets instead of liabilities. Right now, the existing accounting, it favors using credit and sovereign debt, and the after-tax yield of credit isn't keeping up with cost of capital, and the result is most corporations pursue dilutive strategies of acquisitions, share buybacks, dividends, which are taxable, and they can't really hold billions and billions of dollars of capital and beat the cost of capital and generate shareholder returns. So this FASB accounting allows you to mark up and down the asset. It allows you to recognize investor gains. You know, if Berkshire Hathaway didn't have Apple, it wouldn't be a winning stock, but it's not practical for 1,000 companies to hold Apple stock as a treasury reserve asset. It is practical for them to start buying Bitcoin, and FASB's accounting opens the door for that. The liabilities are the early crypto cowboys, the crypto tokens, the unregistered securities, the unreliable crypto custodians. For the industry to move to the next level, we need to migrate to adult supervision. We're going to need big banks to become the crypto custodians. We're going to need Wall Street to take a role. And we need to rationalize away from the 100,000 crypto tokens, you know, yo-yo coins that people are manipulating, to Bitcoin. Bitcoin is an asset without an issuer. It is the one universally recognized protocol that's a commodity in the space. So when banks on Wall Street and responsible custodians are managing Bitcoin and the industry takes its eyes away from all of the shiny little tokens that have distracted and demolished shareholder value, I think the industry moves to the next level and we 10x from here. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters, and their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin. I think it's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry. MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin, and we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class.
In the realm of Bitcoin, Michael Saylor emerges as a beacon of bullish sentiment, anticipating an extraordinary 10x surge that would propel the cryptocurrency to an impressive $350,000 per coin. Beyond its audacious numerical forecasts, Saylor's predictions resonate with an excitement that mirrors the bold trajectory he envisions for Bitcoin. Articulating a narrative of financial significance, Saylor underscores the synergy between a Bitcoin ETF and the upcoming halving event, describing it as a perfect storm in the realm of finance. This convergence is poised to create a dynamic scenario where the anticipated reduction in Bitcoin supply, driven by miners, coincides with a surge in demand, setting the stage for potential exponential growth. Saylor's insights extend beyond mere speculation, delving into the transformative impact of the spot Bitcoin ETF. He positions this development as a potential harbinger of a substantial wave of institutional investment, fundamentally altering the landscape for Bitcoin. As we reflect on Saylor's outlook, his emphasis on the intersection of reduced supply and increased demand transcends theoretical discourse. It stands as a potential catalyst, paving the way for the next significant leap in Bitcoin's valuation. The intricacies of this convergence create an environment teeming with transformative possibilities in the ever-evolving cryptocurrency realm. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.